One of the largest housing markets in the United States is suffering levels not seen since 2008. But is this the sign that Jerome Powell needs to cut interest rates? Many are talking all about this, and I went over this in yesterday's show about how the Fed is coming at Jerome Powell's neck, essentially saying, hey, we need to cut now in order to not feel the pain in the future. The sad reality is that we're seeing headlines similar to this all over the country where people are saying, hey, look, Florida's housing market is mirroring the 2008 crash. Now, this is not just Brandon at Macro Insights here saying, hey, look at this. This is all up in flames. No, this is Newsweek. These are some reputable headlines now saying all of this. Now, why are they saying that it's been looking at something related to the 2008 market? Well, Nick Gurley has said that there is a warning that has caused Florida's housing market to decline for an extended period. During the pandemic, many people flocked to Florida, as many of you know. I mean, I got there just before the pandemic, but many got there during, similarly with the Texas, Austin, and Nashville type of markets. But this coincided with an oversupply of homes on the market, falling demand and affordability issues for local buyers, leading to an analyst warning that the housing market could be heading into a quote prolonged downturn. Now, this could be a huge negative here going forward because the housing market in the state of Florida is for a lot of the snowbirds, right? And it's for something that we're going to see coming. When we see a downturn in one of the largest states in the United States, this is something that should be raising flags. And it's something that we should be keeping a very close eye on. I mean, we've been looking at the housing market, we've been looking at a bunch of different markets, the job market specifically as well, to kind of dictate how the consumer is doing. Now, majority of Americans have majority of their net worth locked into their house. So, by turn, if the housing market takes a downturn, that is a huge negative to the amount of borrowing power and purchasing power that a said American has. Now, with that, right, the Florida job or housing market is very unique, right? Florida has 177,000 homes for sale, the most on record, while the entire Northeast in the US has just 79,000 listings. So migration to Florida has dropped 80% from the pandemic peak. Now, I get it, right? You're going to tell me, hey, the pandemic saw a major shift towards Florida, but a drop of 80% is something that very few markets could ever withstand. So seeing that dramatic drop is something that we need to keep a very close eye on and see how the Florida market seemingly recovers to that, right? So Gurley said that local home buyers in Florida now need to pay a 39% of their income on their mortgage and tax costs for buying a house, which is the highest level since the 2006 2007 bubble. Now, this is obviously an extremely alarming headline, right? When we see stuff like this, it's saying, hey, we are seeing levels where the consumer is spending majority of their money now on their mortgage, and there comes an affordability crisis. Large home prices now are skyrocketing, as many of you guys know. I like to say skyrocketing in flight, but this isn't the beneficial aspect, right? It's just everything is going up in price and their wages aren't going that direction. So what's going to happen then? The buyers flee from the market, or the buyers don't necessarily go in and buy all of these homes. So what's going to happen then? The housing prices tank. And so unless wages go up to meet and people have all of these savings, we're going to run into some serious issues here going forward, especially for the Florida housing market. But Gurley argued that the main issue facing Florida's housing market is in the decline is the inbound migration, and is commonly cited factors as such as high homeowners association fees or insurance costs. Obviously, we've seen insurance costs raise up dramatically here within the past year, but we also have seen just global, or not globally, but just through the entire country, that the spring housing market in 2025 has been a lot lower. right? Usually springtime is where people start to see it, right? They're going to start to look at, hey, we want to buy this spring, move in the summer, excuse me, and buyers have more options now, which means more room to negotiate, but should be prepared for higher monthly cost. So all of this is just going to be slower movements, less deals being done because these factors, right? We're seeing just the reality of it, that there is higher monthly cost and that there's more options. So they want to find something that's going to fit their budget and find something that, is going to be in a nice neighborhood and where they want. But sellers may struggle to find a buyer, but in competitive markets like Chicago, which I think is interesting, they will likely see more offers. However, monthly costs have reached record highs, leaving more buyers and sellers on the sidelines, causing a slow start to the home buying season, which I think is huge, right? We're going to start to see this. These deals aren't going to be done very quickly. When we saw during the COVID boom, the cerveza sickness, we saw basically players coming in and out left and right and then paying hundreds of thousands of dollars over asking price. This is not the scenario here. We are not going to be seeing this. We are seeing currently a huge slowdown in the amount of buys. So when we see this big slowdown, right? I already lined it out a little bit earlier. Majority of these players have their net worth all in their housing price. So the spring home buying season has officially begun, and it's weird. Sellers are staying put and buyers are feeling priced out, causing inventory to grow unevenly across the country. One of those places is Florida, of course, as we've lined out. But it's not just this one article, right? Buyers remain hesitant amid economic turmoil. So there's also the economic factors that they're looking at, right? Everybody wanted to point at as, looking at various things like the tariffs. I think if an average home buyer is looking at tariffs and saying, hey, I'm worried about buying a house because of tariffs, I think that's absolutely crazy and a lunacy headline. I don't believe that for one bit. But what I do believe is that everybody's looking at these things, right? We just had a big giant war start in the Middle East. We've got the tariffs, for better or for worse, where people are unsure of where the market direction is going. And then on top of that, we've had massive amounts of inflation and we've had 4 years of a very shaky economy. Of course, Donald Trump is trying to get out of that. But the fact of the matter is that we haven't had a very strong economy in quite some time. So there's a multitude of factors, but everybody is being very tentative. And the Florida housing market has been seeing a downturn, and analysts are suggesting it could mirror a 2008 crash. The decrease in migration to the state and oversupply and affordability issues, particularly for local buyers, while some areas are seeing price declines, others remain relatively stable, making it a mixed market. But all of these factors seem to be basically the reality of what we're seeing for the housing market. A lot of people bought in, the 2020 time when we saw this boom and got interest rates under 3%. Now, many of you who have done that see these interest rates now at 6, 7, 5 even percent. Why would you leave a house that you're comfortable in to pay more in interest? Obviously, you've, maybe gained some in equity and see it develop through that perspective. But the reality of the situation is a lot of people just look at that interest rate number and they don't want to be paying that much in interest. So what do? They're staying put. And they're looking at, hey, are housing prices going to drop? Yahoo Finance is even writing an article about that. Outlook as new home inventory. And this is written literally a week ago. And the data from Realtor says that existing home sales are slowing down. The typical home sale spent 51 days on the market. That's 6 more days than last year. So is the housing market cooling? And when will housing prices drop so I can get my slice of the home ownership pie? Well, the reality is housing prices are not going down. They're increasing at a slower rate, but they're not going down. As of May, Realtor.com reported that the year-over-year housing prices are relatively steady, putting a median sale price at $440,000. So we're seeing this all over the globe and especially in the major states. But we're seeing this in a state that, is not actually in the top 10. It's the 17th largest state when it comes to the median home price. Of course, these very specific areas like Hawaii and District of Columbia, they're kind of hard to include in a study like this, in my opinion, because, hey, you know what? You've got a very limited space. Hawaii, it's like comparing the whole state of Florida to maybe like New Manhattan in New York, which I don't necessarily agree with. But the reality is, if you count these all as the 50 states, Florida is number 17 at this. And it's one of these states where we've seen massive amounts of migration. I teased this at the intro, but we've seen a lot of the Fed chairs now starting to come out and tell Jerome Powell, hey, we think we should cut interest rates here in July. We're starting to see the consumer wane. We're starting to see some issues here back and forth. But, when you're looking at these various factors, is Jerome Powell actually going to cut interest rates? Well, you look at here. Yesterday, I did this live stream. We were sitting at over 22%. It's dropped 6% in a day. They've seen a lot of pressures. We've had various Fed officials come out and say, hey, we need to cut interest rates. We need to do it quickly. Now, the reality is that the 16% chance is showing, hey, it's getting less and less likely that Jerome Powell is going to cut interest rates. But this is also 36 days away. So, even though we're seeing this kind of decline here now, a lot can change in 1 month. And especially when we're starting to see, especially when we're starting to see Fed members start to come out. And as we're not going to cut interest rates if we start to continue to see this. The Dixie falling below 98. We haven't seen that really in quite some time. So the Dixie falling as low as it is means the strength of the dollar is down. Year to date, the dollar's down nearly 10%. This might be the worst start to the dollar or the Dixie, in the U.S. Dixie history since they've been conducting this study. Obviously, when they do these things, right, the differences in the year-to-date value of the Dixie obviously contains a lot of variability. But the reality is when they print more money, when they go through more quantitative easing, the swings in this are way more dramatic than anything we've seen before. And so that's being shown here when we look at the Dixie, seeing it as the worst year-to-date start ever, and nearly down 10% year-to-date. And it doesn't seem to be going anywhere. But everybody just then flocks to assets. So we're starting to see, the increase of the S&P 500. We've got over a 1% start here, just kind of coming in hot. And so when we've got a 1% start of the day and year to date, the dollar is up or the S&P 500 is up 3%, when the Dixie is down nearly 10%. That should tell you something here, folks. That should really tell you what is going on. The true picture here is that the dollar is waning and people are really flocking towards assets and these hard assets, right? Whether it's stocks or real estate. But they're going to more of the ones with the lower barrier of entry, which makes me believe that, hey, the consumer is hurting and we have to keep a very close eye on it. We've got McLovin in the chat. What's going on? I know I've been seeing a bunch of you guys pop in and out of here. So be sure to smoke that like Cheech and Chong, and hit that subscribe button because we're talking about Florida, one of the top housing markets in the country, mirroring the crash of 2008. Now, that is not my headline. That is, Newsweek's headline over here showing that the housing market in one of the major states is actually waning pretty good. Of course, we've seen a giant decline in the amount of people, but seeing the 39% of their income on mortgages and tax costs for buying a house, which is the largest since the 06-07 bubble. Then we're also seeing insurance prices, HOA fees. Florida is now entering a down cycle of inbound migration, and that down cycle will last for years. So Florida's housing market is in a downturn. Prices are dropping all across the state and will likely continue to drop for years due to an oversupply. So Florida, multiple year housing crisis and a big correction. And this is going to start to mirror everybody that we're seeing or all across the country. So be sure to smoke that like Cheech and Chong, hit that subscribe button. I know that nearly 80% of you guys that watch this channel are not subscribed. So please do help me get to that 1K subscriber count as soon as possible. And thank you guys all for coming out. So, McLovin, you're a legend. Thank you for being in the chat. Tell a friend to tell a friend. And I will see you guys all at the next one.